28. My name is Melina. Today we're gonna present our report analysis to give some recommendations about whether buy or sell the ordinary share of Transurban Group. First, I start with the product process to help understand the performance of this company. The first is rate of low entry is known as the toll road operation industry requires large financial investment in constructing toll roads. It means new entry needs to invest large amount of funds for entry. Besides, the government also have very strict requirements for entry. Transurban Group has achieved supply-side benefits of economic scales in suppliers and customers. Therefore, operating cost of toll roads is relatively lower, and the service of Transurban Group has been endorsed by customers and has occupied of 80% market share. The second one is power of suppliers. For suppliers of building materials such as grievance and current companies, they could derive income from other construction programs such as house building. Therefore, suppliers of building materials has power in deciding contract to some extent. The third one is the power of buyers. The customers are price sensitive. If Transurban Group decide to increase their prices, the customer will continue to travel in free roads and other public transportation. The fourth one is threat of substitute. As I mentioned before, if the Transurban Group increase their prices, it will need customers to change their travel way to long toll roads, public transportation, as well as free road. So the power of substitute is quite high. Last one is rivalry among competitors is known. Transurban Group accounts the largest market share, which is over 80% of the whole market. And it indicates that customers has brand loyalty to Transurban Group because of its high service performance. And the governments prefer to cooperate with Transurban Group in operating the toll road and as because of its rich operating experience.
Now let's come to my part. Firstly, I'm going to introduce the Transurban Group for you guys first. Transurban Group is one of the most famous road operators company in Melbourne, Australia. It was founded in the year of 1996 and it's listed in the Australia Securities Exchange. It is also a technology company that has been indulged in continuous research and development of tolling and transportation through innovation in technology for faster and safer traveling of both local as well as international individuals. To talk about the purpose, according to the company aims and objectives, the main purpose of Transurban Group is observed to build as well as operate the toll roads in Melbourne, Sydney, as well as Brisbane to provide a safe and easy transportation for everyone. In addition to this, the tour company is also responsible for providing services in Greater Washington, Montreal, Canada, and the United States of America. Based on aims of long-term benefits, the company's main purpose is to deliver a real and everlasting advantages to the cities as well as their communities. Also, the company has initiated various activities of development through building parks, pathways, and community facilities for planting trees and helping in increasing sustainability in transportation, keeping in mind the wildlife habitats. To talk about the business strategies, according to the Cooperative Report of 2020, Transurban Company wants to strengthen the communities in accordance with the transport with the increasing value at work and value creation for its stakeholders. As we all know, the business strategy of touring company is based on four main aspects. There are deliver and operations, optimal networks, stakeholder engagement, and disciplined investment. Also, Transurban has been committed to sustainability with consistency from a long time. It is enabled to strengthen communities through sustainable and safe transportation. Based on long-term values for investors and other relevant stakeholders, the company has been delivering much more than financial returns.
The share price of Transurban Group on 9th of September 2021 is $14.08 to make the investment recommendation. relative valuation is adopted to estimate the intrinsic value of the share, and by comparing the actual share price to intrinsic value, a buy, sell, or hold recommendation can be made. For the relative valuation, the first step is to choose appropriate multiples. For Transurban, EV to EBITDA and the price to book value are selected for valuation. The reason why these two multiples are selected is that Transurban had a negative earnings, so that any multiples based on earnings wouldn't be appropriate. Since Transurban is a capital-intensive company and would take a long period to recover its initial investment, EV to EBITDA would be suitable. The second step is to choose comparable firms. The 5 companies are selected because they operate in the same toll road operator industry and have similar characteristics. Then 2 different technicals are adopted to estimate the value of the share. The first technique is to figure out the key drivers for price to book value and run regression. The key drivers for book value to price to book value are determined to be ROE and long-term growth rates. The financial data for these comparable companies and the target company at the end of the recent financial year are found. Based on the regression and Transurban's financial data, the estimated price to book value is 2.72, since Transurban's current price to book value is 3.8. Transurban is overpriced. Besides, the value of Transurban can also be estimated. Price is $10.28.
Good morning, my name is Jiayong. Let me continue to the second technique. The second method is identify the key driver of EV divided by EBITDA and run the regression accordingly. EV divided by EBITDA's multiples are used since the company has negative earnings and is capital intensive. Firstly, the key driver for EV divided by EBITDA are determined to be return on capital, free cash flow margin, and growth rate. Based on the financial data, regression is run, and the output is shown in this slide. We can get the regression of EV divided by EBITDA is equal to 20.01 minus 121.43 times return on the capital plus 26.86 times free cash flow margin plus 12.32 times growth rate. We can use the formula to apply it to the EV divided by EBITDA is equal to 29.57. Since the Transurban current EV divided by EBITDA is 32.9, Transurban is overpriced. Secondly, we can estimate the value of Transurban. The formula is that equity value is equal to enterprise value minus net debt according to the first step. EBITDA is $8,076 million, and the net debt is $13,687 million. So the equity value is equal to $12,216.32 million. Thirdly, the share price we know that is equal to equity value divided by the share outstanding. There are 2,738 million shares outstanding in the Transurban. When calculated by this formula, we can get the share price is equal to $4.46, but the actual share price is $14.08. We can know that the Transurban share is overpriced. In the conclusion, both multiples show that Transurban share is currently overpriced, so that we suggest to sell the Transurban share. Thank you.